Hey guys, Crypto here with a new YouTube video update. It has been, I think, over 3 weeks since my last YouTube video update, and up until now, there hasn't really been any reason to make a new update video. We're gonna go ahead and I'm just gonna play a short little snippet from the last video from 3 weeks ago in case you haven't seen that one to get you guys caught up, and then we'll continue on from where we are today, in context of that last video and take it from there. So without further ado, guys, here's the clip from my last YouTube update video shared about 3 weeks ago. Enjoy. Two areas of interest, 62K, above that 69 to 70K, which is this region here. Until we get above that, we can't become full bull. It is what it is, guys. Back when we were trading here at 70, 69, 70K, the same thing happened. I literally said, you need to be cautious here because I think we're going to dump. And I got met with, people saying you're crazy. We're at the highs, we're going to break through. And then we broke down, right? So the key is just because we get close to these highs, just because we're close to the highs, doesn't mean that we should be overly bullish where we've seen repeated rejections and lower highs every time we get to this region. Okay, if we get to this region, it's technically the most likely place to see a rejection. So don't get uber bullish at the most likely place to see a rejection, just like people did here, 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 and here. Okay, each of those times we were able to see data on Velo Data, which I use frequently, that told us that this move was likely to be faded, and we called it as we saw it, and it worked out well for us. So again, keep in mind, just because we climb higher than expected here doesn't mean we flip massively bullish without seeing more data to support the idea. Before jumping into today's content, I wanted to give a quick shout out to my sponsors at Woo. We are actually doing a MacBook Pro giveaway right now that's in progress. There's about 2 weeks left to enter, and all you have to do is create an account using my ref link here. All the details are on my Twitter page, but you have to create an account using my ref link, deposit at least $100 into that account of any crypto, and then make at least one trade. If you do that, you're eligible to win a MacBook Pro. Again, the winner will be drawn on November 1st, and if the winner does not claim the prize within 7 days, we will keep drawing new winners until the MacBook is claimed. So we want to make sure that we give this away to one of my referees. I will also add that I will put the link to this tweet in my video description down here at the bottom on YouTube. So if you look at the comments, it'll be the pinned tweet. And if you are new to my account, then you know that we do these giveaways quite frequently. I think I've given away $10,000 plus over the last few months to my referees in various giveaways such as this one. All you need to do is follow the directions here to be eligible for this giveaway and all future giveaways. So if you've already done this from a past giveaway that I've done, you're already entered and eligible to win in this giveaway and any future giveaways. Guys, that's about it. Just wanted to highlight this giveaway that we're doing and make sure you guys are all aware. About 2 weeks left to enter. With that being said, guys, let's jump into today's video content. All right, guys. So in that clip, as you guys saw, the key takeaway here is that I mentioned that as we were moving up off of these lows here at 52K, we had some key levels of interest to the upside that I was saying that we should be weary of a potential rejection. And the first region was obviously here, this region between 62 to 65K. I'm just going to go ahead and highlight that. That was the first area where we could have potentially rejected. Obviously, as you can see, we ended up breaking above it, fell back below it, kind of chopped through it and made our way up. Then we now have hit the second area of interest from that video. And if you guys recall from that video clip, again, I said that even if we manage to get through this initial area of resistance, we can't go full bull until we clear this area between 67 to 70K. And again, I say that this is the most logical area to expect a rejection if we manage to climb to it. So we can't let our guard down at these highs, because if we do, we could get very much so blindsided. I'd like to kind of preface this before I dive into more of this content here. Everything that I'm talking about here is in context of trading. I am a trader. I do this every day for a living. And so when I'm talking about this lower time frame price action, it's in the context of those who are trying to learn trading, learn how to trade. If you are a spot holder who is simply an investor and you're not actively trading, then if you've been following me for any period of time, you know very, very well what my stance is here on the higher time frames. And that is that this consolidation is simply consolidation that's preceding a move up to 100K plus. Very, very simple, extremely high time frame bullish here. That has never changed since essentially 15K Bitcoin. We've been looking since 15K for a larger 5-wave move to the upside. And as I've said now for months, this, in my opinion, is the 4th wave before the final 5th or a blow off parabolic top. So again, if you are an investor or a spot trader, this chop that's going on within this range should be of less concern to you. All you should be thinking about is, again, not financial advice, but trying to add at the range lows, this area down closer to low 50Ks, and then you're looking to sell, at 100K plus or whenever this new next rally ends. But again, I am a trader. This is what I do for a living, and a lot of my content focuses on teaching people how to trade these lower timeframes and identify areas of interest and inflection points on the lower timeframes. And so when I dive into this, I just want you guys to approach it with that mindset. If you are not a trader, if you're just an investor, focus on the big picture, which is accumulation here, move up next. If you're a trader though, this stuff becomes very, very important because as a trader, you need to understand where the optimal levels are to enter and exit a trade, where it makes sense to maybe take some risk off, secure profits, and where it makes sense to maybe add on risk and try to attempt trades. And so with that being said, guys, going back to the last video update where I was talking about how a move to the upside is expected, but we have to be cautious here. We are now in that secondary area where it's time to be cautious, okay? And what I kind of want to emphasize here is, any of you who are on Twitter know that the prevailing sentiment right now is extremely, extremely bullish. Of all the big accounts that I'm aware of, I don't think I actually know any accounts, certainly of my size, that are urging caution and are vocally low time frame bearish here. For the most part, what I see is this is the time to be all in. This is the time where you don't think, you just long. This is the time to put all your marbles on the table. That's the prevailing sentiment that I'm seeing across the board from any large accounts. There are some smaller accounts that kind of agree with me that, this is a place where it makes sense to be cautious. But for the most part, you're not seeing that on Twitter, okay? Which is where a lot of these traders reside, right? So the prevailing sentiment is very, very much so bullish. Meanwhile, we are here at the most logical place for rejection, right? Just going off of statistics and probabilities and what we've seen in the past here, guys, every time we've come up to these highs, we've seen a rejection, okay? We fail to break the highs, make a marginally lower high, and then we end up seeing a major dump, okay? Once again, we are back at this region here where the last 1, 2, 3, 4, 5 rallies to this level, this general region on the upside, have all made lower highs and rejected. And each of those rallies, once rejected, led to a pretty massive and aggressive dump. So it makes sense to be cautious here. But I'm going to go ahead and break down today both the bullish and the bearish scenarios. There was a recent development this morning that I tweeted about on Twitter that was kind of opened up doors for a potential bullish scenario here. I'm going to discuss that. I'm also going to talk about the signs that I'm seeing here at these highs that are keeping me cautious. I've been very vocally, cautious at these highs, telling people that, as much as it's exciting to be a bull here, we have to be cautious. Some of you may remember, not the last video, but I think 2 videos before that or a video before that, we had identified a potential impulse off of 60K, right? Some of you may remember this. We had identified a potential impulse off of 60K. We had moved up in an impulsive manner, and I said that dips are for buying. Invalidation is here at 60K. When that level was hit, this was back in June. It's right now October. It's been about 4 months since that level was hit. I was extremely, extremely bullish here because we had an impulsive movement to the upside and dips were for buying and we had a clear invalidation. When this level was hit, following that subsequent invalidation, I then became cautiously bearish at every single high, right? Cautiously bearish here, cautiously bearish here. And in both those instances proved to be the right move because we ended up rejecting and falling back down. And the reason that I became cautiously bearish here is because once again, what we had in this short little region here that initially made me very bullish was a potentially impulsive move to the upside. And again, what we look for are these impulsive moves to identify the start of a potential much larger move to the upside. So this move that we had here, I basically said after we got this invalidation, that until and unless we print another impulse or until and unless we break this series of marginal lower highs, I have to remain cautiously bearish, right? And so back at these highs here at 69K was bearish. Back at here, again, 65K was bearish, and we saw a subsequent dip. I'm going to talk about why I was bearish at these highs. Not just because we were approaching these levels. There was data that I used, and again, those who follow me on Twitter may recall the tweets, but we'll show you. There was data that was used to kind of anticipate that we may reject here. Same with the rejection here, okay? We're seeing that sort of data here again at these highs here at 67K, which is why I'm, again, cautiously bearish, okay? Something happened this morning that opened up the possibility of a bullish scenario here, okay? Up until now, I've said, I'm not seeing any impulses off these lows. These are all corrective movements. Therefore, they should be faded. I'm not seeing a break of these highs. Therefore, we can't get too overconfident yet. We're back in the rejection region. But this morning, we saw what could be, argued to be, a potentially impulsive move. And this is where things get interesting because for the first time since that breach of 60K, for the first time, we have a potentially impulsive move here, okay? Now, zooming in a little bit, we talk about what makes a move impulsive. Again, it's a series of higher highs and higher lows with a lack of overlapping between the higher highs and higher lows, and you should be able to see smaller higher highs and higher lows, like a trend within each of these moves, right? So again, if we look here at this third wave, you can see a 1, 2, 3, 4, 5. And that just means a series of higher highs and higher lows, a high, a low, a higher low, and then a higher high. So when you can see these clear subdivisions, we call them, it increases the odds or the likelihood that we may be seeing an impulsive move. We don't have very clear subdivisions here. This one's kind of just one spike up. So it's not a pretty impulse, right? It's not like a high confidence impulse. Again, the ideal impulse looks like is one that I identified back at 38K before we rode the rally all the way up to 70K was this one right here, okay? And you can see here it's very clean. And so this is like the ideal impulsive price action that we want to see. But you can see here, very clean 1, 2, 3, 4, 5, okay? And within this, if I go to the lower time frames, you can see a clean subdivision of 1, 2, 3, 4, 5. So this is a very clean impulsive move, okay? And we identified that back here at 38K, and we were bullish when we rode that up to 70K. That's the same thing that we're trying to do here, right? We identified one here, it was invalidated. Ever since then, we've been cautious, waiting for another one to print. We haven't seen one, so we've been cautiously bearish at the highs, cautiously bullish at the lows, and it's worked out well for us, okay? But once again, now we're seeing potential for an impulse here on the lower time frames. Now, this brings in a potentially bullish scenario that we have to consider that wasn't present up until literally 24 hours ago. So again, people are saying, why are you just turning bullish now? Number one, I'm not turning bullish. I'm still cautiously bearish. We're in the logical place to expect a rejection. I'm just acknowledging that we do have the makings of a potentially bullish scenario to play out. And now how do we identify if this is something with merit or if it's just going to fail? We watch price action develop. But the point is that if this is the start of a bullish structure or is the start of a breakout to the upside, confirmation occurs on a break of 70K. That hasn't changed. We need to clear this upper red region. That has not changed. So that's our official confirmation. But we can see price action develop from here. And if you want to get a little bit more aggressive, you can try and make an entry earlier as a trader. And if you want to wait for the confirmation, you can do that too. But what we're looking for here is if this is really the start of the large breakout move that's going to be happening in the higher time frames, then invalidation is the origin of this move, right? Which again is this low at 60K or 59K, I should say. So let me go ahead and clean this up a little bit, right? So this is the invalidation for the bullish scenario. Okay, I'm going to turn this green, because this is the line in the sand for bulls. If this level is lost, we're probably going to melt all the way back down to the range lows, okay, as we did here, and see, sub 50K again. But if this level is held and we manage to hold it and trade above it, then we may accelerate to the upside, okay? Now, on the other hand, we have, again, this is the line in the sand for bears. This level should hold as resistance, because if we manage to break this level, we are probably going to take all these highs, and that's essentially the bullish confirmation that we're waiting for. We'll draw a line here in red that indicates the invalidation for the bearish scenario. So what I'm getting at here is between 58K and 70K, both scenarios are on the table. And depending on which way we break, one of them will get eliminated. Now I want to talk about why, despite us seeing a low time frame impulse here, we have to be cautious, because the euphoria on the timeline right now is unreal. And even for me suggesting that we may get a low time frame pullback here, I'm getting tons and tons of hate. The point is that as a trader, we have to be cognizant of these moves because they can make a big difference, right? Again, just as we had the impulsive move here, we have a potential impulsive move here. This is where the similarities are, okay? The other similarities here are that the prior two times, again, this top here at July 29th and this top here at August 25th. Again, everything that I do is based on data, and I use that data to try and determine where the most likely direction is, or the path of least resistance, or where we're headed in order to trade, right? So again, pulling up this tweet back from July 28th, okay? I'm going to show you guys what I was saying at the last two local highs, how we identified them as local tops, so you can see the similarities or differences with the current top that we have right now. So keep in mind what I'm saying here, okay? This is July 28th. Bitcoin's trading at $69,000. Spot market takers that were active the whole way up from 53K have been flat / selling at the highs. Meanwhile, open interest continues ramping up as perp takers keep pushing. It's certainly not ideal if you're looking for a sustainable bullish breakout. Just be careful with leverage here. This was at 69K. This was on July 28th. Let's go back to the chart. Where is that? That is right here. July 28th, 69K. Urging caution at these highs. Why? Because we had spot takers selling off while perp takers were longing. I'll show you guys what that means here on Velo Data, but I'm going to go ahead and highlight this in red, okay? We identified this as a local top. We traded accordingly. We made a lot of money on the subsequent drop down to 49K. Anyone who was screaming bullish here and bought the top then found themselves underwater by about 20%. Now, the next local high here at 65K, we saw the same thing once more. This is August 24th. Okay, this is August 25th. I said we were seeing the exact same signature that we saw at our last local top. And I pointed to that same exact tweet that I just referenced. And here you can see once again, OI ramping up back to levels prior to the short squeeze a few days ago. Perp CVD has been rising since then. Perp players net market buying, while spot CVD has been dropping since then. Spot players net market selling. This is not what bulls want to see at the local highs as we push into major high time frame supply or resistance. And again, showing you guys what the chart looked like here. What we have here is open interest rising. This is at the local highs. We have perp CVD rising and spot CVD selling off. Again, what was the date of this? This was August 25th, Bitcoin trading at $64,000. Let's go ahead and take a look at where that was. That was August 25th, Bitcoin trading at $64,000. That was at this local high. What followed? A dump back to 52K. Once again, we are at the local highs. We are at the most likely place to expect a rejection, the most likely place to put in another lower high. Exactly what we've been doing in this entire range for the last 6 months. If you want to bet on a breakout here, you can do that, but you're going against the odds, especially when the data that we have is showing us the exact same signature. Let's take a quick look at that data. All right, guys, so here is Velo Data once again. Let's take a quick look at what our data is showing us. It's almost very obvious here already. You guys can see this just by looking at the chart here. Now I'm going to zoom out a little bit. We'll go to the 15-minute time frame. Actually, first I'll show you guys how elevated open interest is here because it's still very, very elevated. From our low here, where we had this last liquidation flush down to 49K, open interest was down at about 154,000 Bitcoin. Okay, you can see since then, open interest has increased significantly, currently sitting at 195,000 Bitcoin. That is a approximately 33% rise in open interest through this consolidation, this chop to the upside. So open interest is very high. Now again, open interest by and in and of itself is a neutral metric. It simply indicates that there's a lot of leverage players with open leverage positions. It doesn't tell us whether they're long or short. So in and of itself, it's technically neutral. High open interest means we can see a short squeeze to the upside, we can see a long squeeze to the downside. It doesn't specify which direction. We have to use context to figure out which direction we may squeeze, but it keeps the doors open for a massive squeeze in either direction. Keep that in mind, okay? Point is though, you have to be cautious when OI is high in any position, whether you're short or long, because if you're long on leverage, we get a massive squeeze down, it could hit you hard. If you're short on leverage, we get a massive squeeze up, it could hit you hard. So when open interest is this high, you have to be cautious. You have to keep in mind both bullish and bearish scenarios. You cannot close your eyes or be blind to either scenario. So with that being said, we take a look at the recent rise off of the lows here at 58K, which was our last, relatively local low. And what we see here is that open interest is relatively just chopping about, again, really, really high relative to where we were before. So keep that in mind. But what we see here that's really significant, and what I want to draw your attention to, is that we have a significant rise in perp CVD, okay? Perp CVD, again, is a measure of the delta between market buyers and market sellers. When it's rising, that means there's more market buyers. And again, we're talking about perps, so this is leverage position. There's more leverage market buyers when it's rising, and there's more leveraged market sellers when it's falling. And whenever you see a rise in price along with a rise in perp CVD, it indicates that those that are leverage buying here are driving price up. Unless you see a rise in the spot CVD as well, then spot could be playing a role too. But what do we have here? The exact same thing that we saw at our last two peaks, okay, with spot CVD once again selling off. Now you saw a little rise in spot CVD right here, okay, from this local low to this high, which was, it's about this move right here. We saw a rise in spot CVD, okay, fair enough. So there was spot participation on this rise. But ever since we've hit the local high here at 65K, which again, if you recall, was this first area of resistance, what we've seen since then is spot aggressively selling off. Look at this dive in spot CVD. So you have spot takers aggressively selling off at 65K plus. Going back to our chart, that is essentially this region here. This is 65K plus. This purple region is where we have spot aggressively selling off. And perp CVD continues to grind higher. As you can see, spot's relatively flat on this entire rise. Not only was this entire rise driven by leverage longs pushing price higher, but at the high specifically, we've seen a massive sell-off of spot players, right? And leverage is not budging, right? So leverage longs continue to pile in, and we're seeing spot sell off, where right here at the highs, where right here at the most likely place for us to see a rejection, where right here where we could be making another incrementally lower high. And that's exactly what we saw here at the highs at 70K before this drop. That's exactly what we saw here at the highs at 65K before this drop. I called both of these live in advance. This isn't any sort of hindsight analysis. This was all called at the time on my Twitter with the tweets that I just shared to you guys. And so people continue to attack me for being what I would say logically cautiously bearish here, right? All the data points to what we saw at these last two instances. Again, if you're a spot holder, you lose nothing by being vocally bullish here, because to you, it doesn't make a difference if we drop. But I'm a trader. And so for me, this makes a big difference because I'm trying to trade these markets, and I may be in a position or I may want to lock in gains here or maybe flip short here based on what I'm seeing, right? And again, for those who are learning how to trade, you're interested in this as well. Again, we're seeing all the signs that tell us we need to be cautious here. We do have potential low time frame impulse here, but we had one here too as well that was ultimately faded. Now, one more thing I want to point out, people saying that the drop from 70K to 49K that we got here was like a black swan event. I'm not sure what narrative they're attaching to this, but all I will say to that is we had a drop here of similar magnitude, drop here of a little bit smaller magnitude, a significant drop here. This drop was violent, but we had significant drops throughout this range already. Every time we hit the highs, we had a significant drop. Now, what allows us to see such a violent drop to the downside, right? It's a liquidation of leverage players. There were significant liquidations on this drop. How do we measure whether there's leverage players in the market that will allow for these types of liquidations? Again, how do we measure that? Open interest. And so if we zoom out a little bit one more time, we just take a look at this again, looking at the level from which we dropped at 70K down to 49K when we had spot selling off into this rise. Open interest was where? Initially it was up here, came down, and from here is where we got the big liquidations, right? At this point, open interest was right here at about 191,000 Bitcoin. Okay, where are we today? 191,000 Bitcoin. Where is price today? Again, from that drop, it was right here. Where is price today? Slightly higher. So this just to show you guys that those who are saying that a drop to 49K is impossible, it's certainly not impossible. Open interest, meaning the amount of leverage players that we had, is almost the same as what we had here. That means that the amount of potential liquidations, almost the same as what we had here. And so to rule out 49K doesn't make sense to me. Now, with that being said, if we drop and open interest flushes down back to these lows or significantly lower, and we don't drop down to 49K, then odds are that we continue down to 49K without leverage to flush low, right? But as it stands, leverage is very, very high. It's due for a flush, whether that be on a squeeze to the upside or a breakdown to the downside, we don't know. And they're both viable. They're both possible. What we do know is that we have bullish invalidation here at 58K. And what we do know is that if we lose this level, it's going to get ugly fast. And again, lots of liquidations likely below these lows can very quickly send us back down to the green region here, which again is high time frame demand. And as I said in my last video, the most logical place to be a buyer for Bitcoin. I mean, there's nothing bearish about us testing 49K here, okay? I'm not going to repeat the whole reason why. You can watch my last video if you're interested in that. But yeah, it makes sense to be cautiously bearish here. Now, to summarize this whole thing, what I want to say is that two clear lines in the sand here, and for someone who's new to trading, this is what you want to focus on. I'll try and make this as simple as possible. The best area for shorts, or the best area to de-risk within this range at this particular moment in time, is this red zone. Why? Because it is this area of supply right below the 70K level that we need to break to turn bullish. And the best area on the other side to be long, or to attempt a long, would be this region down here. Why? Because it is the area that's right before invalidation. It is also a lower time frame area of demand. This is the best area for longs. So green is the best area for longs. Red is the best area to consider profit taking, to be de-risking, to be cautious. Best area for shorts if you're interested in playing that way. But while we are within these two areas, both scenarios are on the table and we have to be cautious. This video is not to say that I have incredibly strong conviction in one direction or the other. This video is specifically to say that with the developments of PA over the last 24 hours, I am cautious here because now I see an argument for a bullish breakout. We don't have a bullish breakout yet. It's funny that some people on Twitter are calling this a breakout. We don't have a breakout yet. We're making lower highs consistently. This is not a breakout, okay? Could we get a breakout from here? Certainly. Could we also break down just like we did the last 6 times? Certainly. But these are the two areas of interest. So two things that can happen. One is a small pullback here, consolidation, and then continuation, right? Obviously, that would be our breakout scenario, very, very bullish. And then we get a nice 5-way leg to the upside, again to 100K plus. Alternatively, what could also happen here is that this is another fake out, just like we saw here at 60K. Again, all the signs are there that tell us to be cautious here based on the data that I shared with you guys earlier. So the other alternative is that this is actually a fake out. We may make a marginal higher high, but we failed to break above. We come back down. Maybe this acts as initial support, reject here, and then melt. That's the alternative. And I want to share with you guys one more thing here because there's a way to play this. We're obviously not sure what Bitcoin may do here. There's arguments for both bulls and bears. I can't have high conviction. If you were to ask me this yesterday, my conviction was absolutely bearish, sub 49K, because I wasn't seeing any sort of impulsive price action. We were making grind back up to resistance. Seeing the data that I was seeing, it was very obviously, very much so I was leaning bearish. But now I'm a little bit more cautious because of this potential bullish scenario that has developed over the last 24 hours, right? But what I will say is that, in this case, we see very valid ideas for both bullish and bearish Bitcoin, but a lot of alts look really bad here, okay? A lot of alts look really bad. And I'll just show you guys an example. This is with, and I shared this on my Twitter, all shared live when I was looking to short this region. I shared the short region ahead of time. I shared when I entered my shorts. I shared it all live. My shorts are now in profit. And WIF specifically is one that at the bare minimum looks like it wants to draw down to at least kind of the mid-range here at around 160 to 180, okay? But if WIF loses this mid-range, as you guys can see just by looking at this chart, we have a bunch of unswept lows here, okay? And an untapped range low, we've now taken the range highs. And so liquidity obviously resting below these lows if this level is lost, and then below the range lows. In other words, if Bitcoin does break down okay, if we get the bearish scenario that plays out in Bitcoin, a lot of these alts are going to probably nuke pretty hard, okay? With, I think, whether Bitcoin is bullish or bearish, I think is going to test the green region regardless. If Bitcoin's bullish, we might get something like this, where we test green and then resolve to the upside. But if we're bearish, there's a decent chance that WIF is going to break down. And over the last kind of like 10 hours or so, as spot has been selling off Bitcoin at the highs, we've noticed that coins like WIF, most alts, have actually been bleeding against Bitcoin, okay? You can see here, this is the WIF Bitcoin pairing. Same idea, we hit the area of resistance, the area where I would have shorted, and we saw a meltdown, okay? A small meltdown nonetheless. We haven't broken these lows yet, so you can argue this is just a higher low. Basically, this is an area of resistance that we've now rejected from, and I expect just, even on the Bitcoin pairing, a bleed down to at least this region here, and if we lose that, then the range lows, right? But there's a bunch of alts that look like this, and so my particular approach here is, while we figure out what Bitcoin does, I'm in these altcoin shorts. We'll take a look at one more here. I'm in a short on this one as well from 44 cents, and we're currently trading at 45, but I can just go to the weekly chart here and you guys can see why it's so important to be cautious here. And I'm just going to show you guys how I approach this and what I'm seeing here, because it's quite straightforward. It's quite logical, right? This is the weekly chart. I've drawn this green line, this green trend line, because it's a very significant level in the history of this chart. Acted as resistance on the first rise to the upside. We rejected from it. Acted as resistance on the second test. We broke above it. Once we broke above it, it acted as support. You can see these beautiful interactions every single time. Acted as support, consolidated here, eventually broke down. Once we lost it, it acted as resistance again. We've now broken back above. But even though we've broken it back above, we're currently inside the area we call the point of breakdown, or the area where we saw the breakdown begin. And so this is an area of resistance, and that's why you can see we're chopping around here, because there's sellers obviously stepping in at this level. So despite us being back above this level, if we can't breach this red zone, then what may happen is we end up falling back below the green line. And that's a pretty bearish signal, right? Once you get above an area of resistance, if you fail to reclaim it and you fall back below, it generally means it was a fake out. And then at that point, if we fall back below this area and start trading below green again, I'm going to zoom in. This looks just like WIF. You can take this region here as a range, like I did on WIF, and you can see this deviation above the range highs. And then you can see, once again, a lot of liquidity at these lows, right? And so if we do manage to fail to break out, and we break down and we end up taking these lows, then we have a bearish shift in market structure. This green zone, again, might hold, and maybe that's all we get. Again, this is in the bullish Bitcoin scenario. If Bitcoin's bullish, this green zone holds, we rocket back to the upside. But if we get the bearish scenario on Bitcoin, and we're now trading underneath this level here, then we probably come back up, reject, make that famous triple tap that I've talked about, and then come all the way back down to the range lows, which is, again, a 50+% drop to the downside. So a lot of alts are in these precarious positions where if Bitcoin doesn't break out, if Bitcoin fails here, going back to the Bitcoin chart, if Bitcoin fails at these highs for the 6th time and does break down here and does hit 58K and goes further down, a lot of these alts are going to take massive, massive hits. And again, if you are a trader, this is a value. This is important stuff to know. If you're a spot holder, you might find this valuable as well, because maybe you don't want to go through a 50% drawdown, right? In that case, you can take some profits, and then if we go up, you can buy back in. But if we don't go up and we reject, you can buy twice as much at the lows. And again, I always advocate keeping spot and trading portfolios separate. So even if you are a spot holder, there should be a portion of spot that you simply don't touch. As a professional trader, you can afford to trade, and that's fine. But even I myself have a spot portfolio that I do not touch, because I know that I am not infallible. I can make mistakes as well. And so I keep my portfolio separate. If I'm wrong about a correction here and I de-risk in my trading portfolio and we break out, I make money on the spot portfolio regardless. If I'm right about a rejection here and I'm shorting or taking profits on my trading portfolio, then I can buy back a bunch more here, and my spot portfolio will see some temporary drawdown, but ultimately when we recover, we'll go back up with the rest of my trading portfolio. So you always want to keep those things separate, and you never want to go all in or all out. I talked about this as well in a recent interview, but the point is, guys, we have to be cognizant of this possibility. We cannot dismiss it, especially after seeing 2 rejections with the exact same data, the exact same signals and signs that we were seeing now lead to significant drops. We have to be careful here. And so that is mainly what I wanted to get across in this video. It makes sense to go for shorts on alts, because again, if Bitcoin does break down, alts are going to fall very heavily. If Bitcoin breaks out, if we get the bullish scenario, because these alts are also bearish on their Bitcoin pairings, they will not follow Bitcoin immediately, or you'll have a time to exit. These are weak against Bitcoin for now, for the time being. Bitcoin is the strongest coin in terms of potential for the next move, right? When the next move comes, it's going to be Bitcoin that erupts to the upside when it finally breaks out, right? It's not going to be altcoins that are erupting. If altcoins are erupting, Bitcoin's probably still consolidating. When Bitcoin erupts, as we know, it steals the show for a period of time before alts follow. So you're better off when you have a situation where Bitcoin could make a massive move to the upside. You're better off shorting the weaker assets, like some of these weaker altcoins. Now, some altcoins are obviously very strong. Don't worry about those. There's always some anomalies and exceptions to the rule. But for the altcoins that are weak, those are the ones that you'll target in a situation like this, because when Bitcoin does break out, it will be very violent to the upside, right? So if you don't want to risk that, you can always look to short some altcoins that are looking significantly weaker. That way, if you're wrong, you're not caught offsides, right? And guys, one more thing that I want to cover, because I seem to get this question a lot on Twitter. A lot of people mention the recent ETF inflows that we had over the last couple of days as an indicator as to why this time is different. We've had these massive ETF inflows, therefore this time we're going to break out of this range. So I just wanted to point out to you guys that if you are looking for this as a reason to be bullish here, it's actually a reason to be bearish based on historical data and correlations with what we've seen. This chart here by my good friend Crypto Condom here on Twitter actually shows a chart of the amount of ETF inflows on different dates. And what we can see here is that typically these major spikes in ETF inflows, which are the blue lines here, actually correlate typically with local tops. And so today's ETF inflow, this was on October 14th, was 555 million. This green dotted line here that you see here is the $500 million mark. So historically high inflow, greater than 500 million days, tend to occur around market supply zones and market local tops before profit taking. Conversely, high outflow days down here, less than 300 million, tend to act as bottoming signals. So the last 3 times we hit greater than 500 million inflows were September 27th, July 22nd, and June 4th. And if we go to our Bitcoin chart again, September 27th is going to be, we'll put a little bear on it. September 27th is going to be right here. This was the last recorded day of greater than 500 million inflows. So July 22nd is right here. We had another big day of inflows, and June 4th is going to be right here. Okay, so as you can see, these days of massive inflows, surprisingly, not what normally you'd think, but these days of massive inflows typically tend to occur at the highs around areas of supply like we are at now, and therefore are not necessarily an argument to be bullish. I'm just pointing this out because I get people with this comment so many times over the last few days. We've had massive ETF inflows. This is why we're going to break out this time. And to that, I would say that just actually strengthens the bearish argument here, or it kind of adds a reason to be, again, cautiously bearish in this area of supply. With that being said, guys, we'll watch and see how price action develops here over the coming days. And of course, I'll be posting updates on Twitter, and we'll see how things develop, guys. If you guys have liked this video, please like, share, and subscribe, and catch you guys in the next one. Thanks.